All right. Hey, everyone. Welcome back to the deep dive.
Back again.
You know it. So today we're going to be doing a deep dive into Gland Pharma's Q2 FY25 investor presentation. Basically looking at their financials, any key developments, and kind of trying to figure out where this company is headed.
Let's see what's going on.
Exactly. And this is important, whether you're an investor or you work in the pharma world, or maybe you just want to see how these companies operate. So without further ado, let's jump right into it.
Let's do it.
Okay, so kind of a high-level overview first. How did Gland Pharma perform overall in Q2? Their investor presentation mentions a 2% year-on-year increase in revenue from operations, reaching INR 14,058 million.
Yeah.
So, on the surface, that sounds pretty good,
It
right?
does. It does. Revenue growth is always a good sign.
Yeah.
And it's actually even better when you know that it's being driven by volume growth,
Mm.
especially in their key injectable products. And, also all the new product launches they've been doing. So they're expanding their offerings, capturing more of the market, which is all good stuff. But there is a twist. Their profit after tax, or PAT, actually went down by 16%, landing at INR 1,635 million.
Oh, interesting. So revenue's up, but profit's down. It's like throwing a big party, but ending up broke. What's going on there?
Exactly. It seems kind of counterintuitive. So we need to look a little deeper. Top-line growth is encouraging, yes, but this decline in PAT, it suggests there might be some underlying factors at play here affecting their profitability.
Hmm.
That's where our deep dive comes in handy. We get to try to figure this out.
Okay, love it. So I know that Gland Pharma acquired Cenexi recently. That's a European pharmaceutical company. So should we factor that in right now, or is it too early to be thinking about that?
I think it's probably best to just analyze Gland Pharma's base business separately from Cenexi for now. Just gives us a clearer picture of how Gland's core operations are doing without, kind of the noise of this recent acquisition that's still, being integrated.
Yeah, that makes sense. Okay, so focusing on Gland Pharma's base business, then what's the story there?
Well, uh, their base business revenue jumped to INR 10,659 million. That's a 5% rise from the same period last year,
Right.
which is pretty good. But here's the real kicker. They achieved a 34% EBITDA margin in this segment.
Oh, wow. Okay. So for those of us who aren't, financial experts,
Yeah.
what does that tell us?
Basically, it tells us that Gland Pharma is running a really tight ship.
Yeah.
34% EBITDA margin, it's a testament to their operational efficiency. For every INR 100 they generate in revenue, they're keeping INR 34 as profit before you account for all the other stuff.
Yeah, yeah, yeah. Okay.
So it puts them in a very strong position to invest in future growth.
Okay, so we've got high revenue growth, we've got stellar margins, that's pretty good. But let's not forget about innovation. That's the lifeblood of any pharma company. Are they actually, putting their money where their mouth is? Are they investing in research and development?
Absolutely. Yeah, they are not resting on their laurels. Gland Pharma put INR 493 million into R&D. That's 4.6% of their revenue.
Yeah.
They're serious about staying ahead of the curve, developing new and innovative products.
That's great. Okay, so their base business seems to be doing quite well. But let's focus on a couple of key areas here. What's the deal with the U.S. market? How important is that for them?
So the U.S. is Gland Pharma's bread and butter.
Yeah.
It brought in 70% of their total revenue this quarter. They've really established themselves in the U.S. generics market.
Wow, 70%.
Yeah,
It's a lot.
it is.
But doesn't that also make them kind of vulnerable? What if something happens, like, new regulations or competition increases?
Yeah, for sure. I mean, that reliance on the U.S. market is a double-edged sword. It's currently their strength. But any regulatory hiccups, any pricing pressures, anything like that, in the U.S., healthcare landscape could have a big impact on Gland Pharma.
Yeah, that's a good point. Okay, so how are they actually doing in the U.S.? Any new products?
Yeah, they are not slowing down. They just launched 4 new molecules in the U.S. market. Cetrorelix acetate, ephedrine sulfate, tranexamic acid, and diazepam. And they've got 363 ANDA filings with their partners in the U.S., and 304 of those are already approved. ANDA, by the way, stands for Abbreviated New Drug Application. It's basically the FDA's approval for generic drugs.
Okay.
So they're not just launching products, they're building an arsenal.
Yeah, those are some impressive numbers. It sounds
Mhm.
like they're really doing quite well there. But the U.S. is not the only game in town, is it? Gland Pharma has some global ambitions, right?
Oh, absolutely, yeah. The U.S. is their stronghold, but they are making moves in other places.
Mm.
Their revenue from Europe, Canada, Australia, New Zealand, all that, it's all going up. These markets together made up 16% of their revenue this quarter. So they're diversifying.
That's great. So they're spreading their wings a little bit. Any particular region that stands out as a growth opportunity?
Well, I think China's the one to watch.
China. Interesting. Why China? What's their strategy there?
Well, China's healthcare market is huge, and it's growing really fast. Aging population, rising incomes, increased access to healthcare, all of that. And Gland Pharma wants a piece of that action. They've already got approval for 5 products in China, with another 4 in development.
That's impressive. But it's a tough market. How can they stand out in China? What's their secret weapon?
I think their secret weapon is their focus on complex injectables.
Ooh, complex injectables.
Yeah.
That sounds interesting. What are those?
Well, they're basically highly potent medications
Hmm.
that are delivered through injections or infusions, often used for serious conditions like cancer or autoimmune diseases. And this complexity, it creates a high barrier to entry. So companies like Gland Pharma, they have a competitive edge.
Ah, okay. So they're kind of specializing in the high-end part of the market, the high-value stuff.
Exactly.
Okay, makes sense.
Yeah.
How are they actually performing in that space? Are they just getting started, or have they already got a good foothold?
They're doing pretty well. They've already filed for 9 complex injectables with 6 approvals and launches. And get this, they're aiming for a portfolio of 19 products in this space, targeting a market worth, you ready for this?
Yeah.
$7.3 billion,
Mm-hmm.
according to IQVIA.
Wow. Okay, so complex injectables, they're doing that. What about biologics? That's another hot area in pharma, right?
Yeah, absolutely. Biologics are like the electric vehicles of the pharma world.
Oh, I like that.
Right.
Yeah.
Poised to revolutionize how we treat a ton of different diseases. And Gland Pharma is not missing out. They've partnered with Dr. Reddy's Laboratories to dive headfirst into the biologics CDMO business.
A partnership. Okay. Why partner? Why not just go it alone?
Well, it's all about synergy, right? Gland Pharma brings its manufacturing expertise, especially with their new biologics facility in Hyderabad. And Dr. Reddy's brings their market reach, their distribution networks, their experience in this area.
So it's a win-win. Okay, I see. So Gland Pharma, strong base business, dominant presence in the U.S., global expansion, focus on complex injectables, now a partnership to get into biologics.
It's like they're building a diversified portfolio.
Yeah. But what about Cenexi? That acquisition that's been giving them a bit of a headache.
Yeah, we've talked a lot about their ambitions. But now it's time to look at the reality of this recent acquisition. Remember that negative EBITDA we talked about?
Yeah.
It's time to look into Cenexi's performance and see how that fits into Gland Pharma's overall picture.
Let's do it. But first, I think we need a break. To process all this information, we've covered a lot of ground. But when we come back, we'll delve into the world of Cenexi and see what the future holds. Stay tuned.
All right, see you soon. All right, so welcome back to the Deep Dive. Ready to take a closer look at Gland Pharma's performance, like segment by segment?
Yeah, definitely. We got that high-level overview. Now let's break it down.
All right, sounds good. Let's start with their stronghold, the U.S. market. We already touched on how important it is, contributing 70% of their total revenue. But, let's look closer at their actual performance there.
Okay, perfect. So they highlighted 4 new product launches in the U.S. That's got to be driving some of that revenue growth, right?
Yeah, definitely.
Yeah.
Launching new products, especially in a big market like the U.S., it's key for any pharma company. They also mentioned, remember, 363 ANDA filings.
Yeah.
Those applications for new drug approvals. And 304 of those are already approved.
Wow, that's amazing. So new launches, that's part of the story. What about their existing products in the U.S.? How are those doing?
Well, that's where it gets, a little more interesting. Their U.S. revenue actually only grew by 3% year on year in Q2, which is, significantly slower than their overall revenue growth.
Oh, that's interesting. So slower growth in their biggest market. What could be causing that?
Well, it could be a few things. Maybe they're facing more competition, which could, lead to lower prices and the smaller profit margins. Or maybe some supply chain issues. It's even possible that some of their older products are just, not as in demand anymore. We need more information to know for sure, but it's definitely something to keep an eye on.
Yeah, for sure. It's a good reminder that even the big players, they have to adapt to the market. Okay, so U.S. growth might be slowing down a little bit. What about their other markets? Are they seeing any more momentum there?
They are. Their rest of the world segment, that includes Latin America, Asia Pacific, Africa, that's actually doing really well.
Oh, okay. How well are we talking?
The rest of the world revenue grew by 56% year-on-year in Q2.
Wow, 56%. So U.S. growth is cooling off, but they're making up for it elsewhere.
Exactly. It's all about balance, right?
Yeah.
U.S. is still their main source of revenue, but these emerging markets, they offer a lot of potential.
Yeah, that makes sense. What about India? How are they doing in their home market?
It's an interesting one. India is a smaller part of their overall revenue, but it's still important. And in Q2, their India revenue was flat year-on-year.
Flat. No growth at all.
Yeah.
That's surprising.
It is a little bit. It could be more competition in the domestic market. Or maybe it's strategic. Maybe they're focusing more on international expansion.
Yeah, that's a good point. Okay, so we've talked about the US, rest of the world, India. What about Europe? They mentioned that as a key market too.
Right, and they're doing really well there. Their European revenue grew by 105% year-on-year in Q2.
Wow, another big one.
Yeah.
What's driving that growth?
Well, probably a few factors. They've been expanding their product portfolio in Europe, focusing on injectable products. And they have strong relationships with distributors and hospitals there.
So they're really hitting their stride in Europe.
It seems like it.
Okay, but let's not forget about complex injectables. We talked about how ambitious they are in that space. 9 filings, 6 approvals, a target market of $7.3 billion. Are those complex injectables actually contributing to their revenue right now?
That's a good question. But unfortunately, the investor presentation doesn't give us specific revenue numbers for that.
Oh, okay.
So we'll have to wait for more details on that.
Okay, so we've covered revenue, different markets, different segments. What about their overall financial health? Are they profitable? Are they generating enough cash?
Right, so now we need to shift our focus from revenue, the top line,
Yeah.
to profitability, the bottom line.
Okay.
And that's where things get a little bit more, a little more interesting. Remember that drop in profit after tax we mentioned?
Yeah.
That's something we need to look at closer.
Yeah, that's a good point. Revenue growth is great, but it has to translate into profit.
Exactly.
So let's talk about profitability. What numbers do we need to look at?
Well, there are 3 key metrics: gross profit margin, EBITDA margin, and PAT margin. These tell us how efficiently they're turning revenue into profit.
Got it. Let's start with gross profit margin. What's that all about?
So gross profit margin is basically the percentage of revenue that's
Right.
left after you take out the cost of making their products.
Yeah.
Raw materials, manufacturing, packaging, all that.
Okay.
A higher gross profit margin means they're keeping more of their revenue.
So what's Gland Pharma's gross profit margin looking like?
Well, in Q2, their group gross profit margin, and that includes Cenexi, remember, came in at 59%, which is a little lower than last year.
Another decline.
Yeah.
What's causing that?
It's hard to say without more information. Could be rising input costs like raw materials, or increased competition leading to lower prices. It's worth looking into more.
Okay, so gross profit margin is down a bit. What about EBITDA margin?
So EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's basically a measure of how profitable their operations are.
Got it. And what's their EBITDA margin looking like?
Their group EBITDA margin in Q2 was 21%. Again, a little lower than last year.
Okay, so that's down too. Is this a cause for concern?
It's definitely something to keep an eye on. It could mean their operating expenses are rising faster than their revenue, or that they're facing pricing pressure.
Right. Okay, so we've got declining gross profit margin, declining EBITDA margin. What about PAT margin?
Yeah, so no surprises here. Their group PAT margin, which includes all their expenses,
Yeah.
came in at 12% in Q2. That's lower than last year.
Mm.
And that's the main reason for that 16% drop in profit after tax that we talked about.
Okay, so all 3 profitability metrics are down.
Yeah.
Is Gland Pharma in trouble?
Well, not necessarily. Remember, they're investing a lot in growth, new markets, complex injectables, biologics. These investments take time to pay off.
So they're sacrificing some profit now to build for the future.
Yeah, exactly.
But they have to make sure those investments are actually paying off, right?
Right. They need to make sure their growth initiatives are working and that their core profitability stays healthy.
Okay, so what should investors be watching for?
Keep an eye on those profitability metrics. Are they stabilizing? Are they starting to improve?
Yeah.
That'll tell us if their strategy is working.
Good point. Okay, so we've looked at revenue, we've looked at profitability. What else should we be paying attention to?
Cash flow. You can have great revenue and profit, but if you're not generating cash, you're in trouble.
Right. Cash flow is king.
Exactly.
So how is Gland Pharma's cash flow?
Well, their investor presentation shows they have a strong cash position. They ended Q2 with INR 20,453 million in cash and bank balances. And they have a net cash position, meaning they have more cash than debt.
That's good, but are they actually making cash from their operations?
That's where we need to look at their cash flow statement, which isn't in this investor presentation.
Oh, okay.
So I need more information on that.
Okay, so we don't have all the details, but it sounds like they're not having any immediate cash flow
It
problems.
seems that way, yeah.
Okay, good. All right, so we've covered revenue, profitability, and cash flow. What's next?
Well, we can't forget about Cenexi,
Right.
that acquisition. Remember that negative EBITDA?
Yes.
It's time to look into that, see what's going on there.
Let's do it. Okay, so welcome back, everybody. It's time to finally unravel this Cenexi situation, Gland Pharma's European acquisition. It's been, well, it's been a little bumpy, hasn't it?
It has, yeah. But, every challenge is an opportunity.
That's true. So before we get into the numbers,
Yeah.
can you just remind us, what is Cenexi exactly? What do they do? And why did Gland Pharma want them in the first place?
Sure. So, Cenexi is a European pharmaceutical CDMO that's contract development and manufacturing organization. Basically, they help other pharma companies develop and manufacture their products,
Okay.
and they specialize in injectables,
Yeah.
which, fits right in with what Gland Pharma does.
Right, right. So Grand gets to expand their manufacturing. They get into the European market. They get Cenexi's expertise.
Makes sense on paper.
Yeah, it does. But why the struggles?
Well, acquisitions are rarely easy. You're merging two different companies, different cultures, different ways of doing things.
Yeah,
It takes time to integrate everything.
that makes sense.
And on top of that, Cenexi is also going through a big expansion, which of course needs a lot of investment,
Okay, so short-term pain for long-term gain.
hopefully.
So what are they actually investing in? What are these big expansion projects?
Well, one big one is a new high-capacity ampoule line in Fontenay, France. It's supposed to start production in January 2025. Ampoules are those, little glass containers for injectables, so this new line will really increase their capacity.
That's good. Anything else?
Yeah, they're also working on inactivated vaccine and ophthalmic gel projects.
Oh, wow. Okay.
Those are, high-value products, so they could add a lot to their revenue once they're up and running.
Yeah, sounds like they're really trying to diversify their portfolio, but I mean, no expansion is perfect, right? Have there been any hiccups along the way?
There has, actually. They mentioned a setback at their site in Belgium due to, get this, a lyophilizer breakdown.
Lyophilizer.
Yeah, it's a piece of equipment used to freeze-dry pharmaceuticals. It's a key part of the manufacturing process.
Okay.
So this breakdown is affecting their production.
Oh, that's not good.
No, but they're working around it. And they're installing a backup unit to prevent future problems.
Okay, so they're learning from their mistakes.
That's the idea.
So even with these challenges, Gland Pharma is still optimistic about Cenexi.
Yeah, definitely. They're actually setting some pretty ambitious targets. They want Cenexi to have positive EBITDA by Q4 of this year, meaning they want it to be profitable. And they're projecting revenue to be over 200 million euros next year.
Those are big goals.
They are. But shows how much confidence they have in Cenexi.
Okay, so Cenexi, it's a mixed bag right now.
It is, yeah.
Short-term challenges, but hopefully a bright future.
That's the hope.
So how does all this fit into Gland Pharma's overall strategy?
Well, I think it shows their commitment to growth, both, organic growth and growth through acquisitions. They want to be a leader in the injectables market.
That's a big goal.
It is,
It'll be interesting to see how they get there.
definitely.
Okay, so we've covered a lot of ground today.
We have.
Their financials, their strategy, this Cenexi acquisition. What's the key takeaway for our listeners?
I think the key takeaway is that Gland Pharma is a company in transition. They've got a strong foundation, but they're also pushing boundaries, taking risks, trying to grow. They're a company to watch, definitely.
Absolutely. And for our listeners, this deep dive is just the beginning. Do your own research, read their investor presentation, form your own opinions.
Exactly.
So thanks for joining us on this deep dive into Gland Pharma. Until next time, keep exploring, keep learning, and keep diving deep.
See you next time.